Hello and good afternoon, everybody. Welcome to our midday market update for Monday, October 24th of 2016. Typically a sleepy day in the markets on a Monday. I want to remind you the information in this presentation is for educational purposes. It does not constitute investment advice. The risk of trading in securities can be substantial. You should carefully consider if engaging in such activities suitable to your own financial situation. Trade Pro Academy is not responsible for liabilities arising as a result of your market involvement or individual trade activities. Also, quick reminder, guys, especially for those of you on YouTube, we're doing morning Periscope updates now as well, around 8:45 a.m. Eastern. So follow us on Periscope and on Twitter. Trade Pro Academy is the handle. If you want to be part of the morning market update emails, type in tradeproacademy.com/Trade Pro Daily, or click the link in the YouTube description, and you too could be part of the magic that happens every morning. All right, and I call it magic, and it's true. Let's have a look at an update of the market and what's happened. First and foremost, we'd have to go through and look at some of the overnight updates. You see manufacturing, flash manufacturing, which is a PMI statistic in Germany, in Europe as a whole, and Japan as well had the PMI report. All did better than expected. All beat the forecast expectations. Actuals came in higher and by a pretty wide margin. All right, and that really kind of drove some of the longs in the Euro market. So the Euro stocks, the 50 there, the CAC 40, all the markets in Europe started to really get higher. They started to get bullish, and it pushed the S&P 500 bullish as well into the open of the session. Well, one thing I've been talking about a lot that most people don't out there is the fact that if you look at, let me just show you a volume profile here. This is the S&P 500 right now. We're going to switch to. You look at a 15-minute chart, rather 30 minutes this is, you're going to see that a lot of the gains have happened. A lot of the gains here have happened where? In the European session, upside. All right, the dark volume here is European session. The light blue is the US. All right, strong upside, sideways. Okay, we had some movement here in the European, sideways in the US. Upwards, then sold off sideways. Downwards. So you can see upwards. The trending days are taking place mostly on the European session. So you need to know this. All right, and what ended up happening into today's open, Europe was really strong on a lot of flash PMI data. All right, we consolidated a little bit. This was the open at 3 a.m. It ripped higher. On the U.S. open, it ripped higher. But usually when you have a Euro session that's strong, that opens strong in the U.S. from 9:30 to about 10 to 10:30 a.m., that's an exhaustion. All right, usually what you could do there is sell that rally, and 85+% of the time, that trade works phenomenally. And that's what I did. I shorted up here. And I'll explain to you why I also shorted this market. We got to look at correlations. It's very important. And today I pegged my trading to the YM, which is the Dow futures. Let me show you something here. Let me go to cursor and with crosshairs. Look at this. What do you see here? The red line is the YM or the Dow futures, and the green line is the ES. All right. Interesting things started to happen here around 9:35 on the open. What happened? All right, well, first of all, Dow started to take a bit of a dip on the open as the ES absolutely skyrocketed. And then once you started to look towards about 950 or so, Dow was heading lower. ES was kind of peaking at a level at which it might have retraced. I say, you know what? That's a great short right there at 950, short the ES. And what ended up happening is one of two things will happen. Either the ES will catch down with the YM, which is the Dow, or the Dow will catch up with the ES. However, in an overnight strong session that opens strong, usually it ropes in some late longs at about 9:30 to 10 a.m., and then they get to be weak longs and their stops get shaken out. That's exactly what happened. And that's kind of the only trade that I saw for the day that gave me some opportunity into the open here. All right, shorted it and bid myself out about 44. So about 3 to 4 point rally or drop that I caught. That's really the only trade that I've seen. This one that you're seeing happen right now, again, another opportunity. Prices came in between these VWAPs. It failed. You can see if you drew a line right here, on 46.5, tons of selling happened here. So all you had to do is recognize these rotations and say, all right, on the first rotation, I see a seller support that level. The second rotation, seller 1356 supporting that level. On the third rotation, 886. Let me see if I could throw an offer and sell into this zone. And when you do that, you should be prepared to take 4 to 5 ticks of heat. That's how much you should be able to let the trade go against you before you have to puke it. And if you shorted that 46.5, you took 3 ticks, and then it went in your favor. I missed that trade. I wasn't on board for that opportunity to downside because it came with the fact the VWAP here for the day session was holding support, and you had some buyers. So that was a good trade. I didn't take it. Right now, I'd be looking to get long. So here's the prognosis on a strong European Open that leaks into a strong US Open. What you want to do is sell the early rallies, and then you want to buy the mid-afternoon dips. Okay, so now I'm on the lookout to buy the dips. I think the bulls have asserted themselves here on a Monday. It's weak volume, but they've made a push higher. They've driven higher. They've gotten above this 48 where you saw a lot of fading happen. Okay, the 44 to 48 area, prices failed there, what, once, twice, 3 times, 4 times, 5 times, 6 times. The 7th time through, there's got to be some buy stops waiting to get taken out. Our bullish target for the week is 21.65 on the upside. All right, we've been beating that drum for a long time. We're above the 100-day moving average now, and we're looking for volume. Volume's going to kind of get in here and get a little more excited than it currently is. On a 15-minute time frame, here's where the ES is at. It's holding some of these lows. Volumes declined on the sell-off. All right, and on the rally, we saw some increase in volume. So we need to get a pop here. We need it now off this support with some volume to come in while this 50-period, 15-minute average is holding. Okay, prices need to rally now. Should we break below this 21.49 on the index, not on the futures, this is the index. We break this level on the index, we're going to see some lower trading in the afternoon to the tune of maybe 42, down to as low as 40. Okay, so about 8 or 9 point drop. On the futures, what that looks like for you guys to trade the futures is, if we go on this chart, I got to replicate it and bring it over. Good old CQG. Okay. What that looks like on the futures is right here. Futures, got to go with crosshairs. This level, 43 even. It's got to hold value area low for the day. Okay, value area high on the 5-day notch. So anywhere in this 42 marker, you should see buyers stepping up to defend this price. I'm waiting for it to drop into here for me to start buying it for the late afternoon rip. On Mondays, mutual funds come in and they come in strong and start buying up this trend. You need to be aware of that. Mutual fund Mondays, they'll start hitting the bid and rallying this thing up in the mid-afternoon into the close. If the close is weak, okay, one of my concerns has been in the last couple of weeks on the S&P 500 is that we're closing weak. Okay, look at this. Close on high volume, weak prices. Close on high volume, weak prices. Close on high volume, weak prices. Okay, the bulls need to get in there and step on this thing and just absolutely smash this 50 and hold it on high volume and close it high. We need nachos on the day. Okay, nachos is new highs on the close. Nachos, give us some nachos and cheese. That's what we need today. Anything other than that is a sign of bearishness, because this rally up into this target, this 2150, 2160 even, becomes the midpoint of this triangle consolidation is broken out of, and sellers are going to try to whack this thing lower one more time if it gets up there. So as you can see, we're doing a good job on the buying side, but we're starting to get faded. So watch for these levels. Be very careful today. Weekly target still 2165. Fed speakers, we had FOMC, Dove, notorious Dove, Bullard speak today at 9:05 in the morning. I'm going to recap what he kind of said. He's a voter. He's dovish. He sees a single rate increase as all that is necessary for the time being. Jobless rates close to the Fed's long-term target level. Inflation's close to the desired level, absent commodity effects. Rates will remain exceptionally low. World of low rates will likely be in place for the next 2 to 3 years. Okay, so he's a dove. So the market kind of liked hearing that and rallied. At this point, I think the Fed Watch futures rather are pricing in a hike. Let's go here. Fed Watch, the CME group tool for December. All right, look at this. Now 75% chance there's going to be at least one. Well, there's going to be a hike, but of at least a quarter point. Some are even saying 6.7% think they're going to get a half a point increase. Yeah, okay, good luck with that. But 67 are lined up for at least one increase. The Fed's kind of managed that expectation. I think the market's priced it in. The market's pricing a Hillary win and a quarter point increase in December. I don't think it gets too spooked if that happens. But if anything else out of that norm that's being priced in happens, and we got downside coming up. All right, one thing that I sent in my newsletter this morning was the Chinese yuan. That's the currency versus the U.S. market. That's troubling to me, and I'm going to tell you why. Because last time the yuan was strong, let me go USD CNY. All right, last time it was strong was on August 25th of 2015. I don't know if you guys remember that if you were trading back then, but I sure as heck was. And it was a facepalm moment for me. And I'm going to show you why. Let's go on the daily. All right, here it is, April of 2015. Sorry, August. What am I talking about? August. Oh, that's why. Like, wait a minute. That doesn't look that bad. Look at this. The yuan started to increase the price from about August 7th. The market couldn't handle that. What happened was the Chinese currency gets devalued. It's not strengthened. It's devalued against the US dollar. The Chinese government fixes or pegs their currency. It's not a free-floating currency like every other market. So when they devalue, they make their exports more attractive to the outside, all right, and kind of puts pressure on North American businesses for their exports, okay, because their prices are higher in relation to the Chinese dollar. And it makes Chinese exports cheaper or more attractive, and it makes the dollar stronger to purchase those exports, but it makes U.S. exports lose the battle and that bidding from buyers, right? If that makes sense. But look at this. It dragged the S&P 500 market down. Every time you've got a steady decrease or devaluation in the Chinese yuan, the market's got hammered. Look, up, it at least fell down for a little bit. And there's a bit of a delay to it. Well, look at this. Up, okay, up and away. Let's see where it stops. There might be a bit of a delay, but I could see a plop coming. I'm not saying it's going to happen right now, but just be very careful. Watch that relationship. Nobody in the media is talking about this. I don't know what's wrong with them. This is a grave concern of mine, and I'm watching for it closely. Looking at oil, CL1, the contract, I think this 50 level is going to get smashed today. Okay, Iraq doesn't want to play ball with OPEC. They're saying they don't want to be part of a deal, and saying because they're fighting ISIS, they need a break on production cuts. They want to produce more. Look at this. Oil's about to take this 50 out. If it takes the 50 out, watch for 49 for your next level for support. Okay, that's the target on oil. I'm currently short oil. All the subscribers that were with here at Trade Pro Academy knew about that trade last week. We're doing decent, not phenomenal, but great on it. You know, whenever you're right on a trade, you always wish you had bigger size. That's never going to change as a trader, never. But when you're wrong, you're like, thank goodness I had small size. So don't go for a kill. Go for consistent, regular profits. That's how you win out in the long run. The guys that post on Twitter, I just made 5,000% return in 12 seconds. Great. I'm willing to bet that the next 5,000% is going to be down. All right. You don't want to live like this through your account because what? Traders are scared of volatility in the market, but they want volatility in their account balance. Absolute nonsense. So watch this 50 level. I think it breaks, comes down to 48 or 49. That's going to be a key support zone. I think we leak out. Saudi Arabia's kind of said a few things. Russian Energy Minister Novak's been on the wire today as well. They're jawboning this thing, but I think it breaks 50. Watch it today. That's super important on oil. What's causing the downside pressure on oil? It's not just the OPEC. It's the strong dollar. This thing's on a tear. Have a look at this on a weekly chart. Triangle comes in here through pretty much all of 2016 as a consolidation. Not much progress on 2016. Suddenly, dollar breaks out and rips. And it looks like it's headed towards the 2016 open or level around 98.36. We're above it now. All right, let me just turn down the squawk here. I think we're headed out for 100 to test some of these highs. And there we might get sold off into. Gold on a beginning wave of a new down move. Be very cautious on this. Here's the trouble with it. This extension that I drew on a weekly chart. All right, it came down, had some bearish volume on the rally upwards. Volume's non-existent. On a daily, same deal. Okay, on the rally up from this retracement or from this down move, no volume. That's concerning. I think we touched the 38% retracement in this mid-level chop. I think next level down is 1210 and 1200. So look out below on gold. Came in here, broke the 200, held it as support. I think we're going down. No matter how you slice and dice it, there's more downside to gold. It's too easy to have just dropped for people to buy and say, all right, up to 1380 again. It's too easy to have gone long there. That's why I don't think it's going to work. I think we're going to shake out some more longs from up here that average it into this position and some weak longs that just got long down here. They're going to get their, you know what, handed to them. So down to 1300. Watch for that. Any questions on YouTube here? Actually, I've disabled the questions for you guys before I call it a day. Stocks. What stock am I watching? I'll give you an idea for the next couple of days. How about that? Netflix. I'm looking to short this thing. Definitely looking to short it. Not yet. I was looking to short at 122.50. At around 130, this thing's going to start to make sense on the short side. All right, volume's kind of starting to decline a little bit. I think on this gap up, we're up 30% now on Netflix. I think we've suckered enough people to get long and long at a late and crappy price. Okay, I think there's a lot of people that got long above 125 because of fear of missing out. When people act on FOMO, they're going to suffer to the downside. I think skulls are going to get crushed on Netflix, but not yet. Just be patient. Don't push these trades because then you just become one of the herd. You got to go against the herd here. The herd thinks this thing is going to go through all-time highs. Let's see. I'm willing to bet that it fails first, shakes out some of these guys, finds support, and then rips higher. Because the market moves to the area that causes the most financial loss and frustration among the most amount of participants. I'll leave you with that. Have a phenomenal afternoon. Be careful out there on the ES. I see a chop session. It's a Monday. It's quiet. There isn't much else on the docket for news. The Fed speak is kind of already passed. We got literally nothing left for the afternoon. We just got Government of Canada, Paul Laws, talking on monetary policy. After market close, we got Visa reporting earnings. That's all you got. Don't be a superhero this afternoon. Keep her tight. Don't get crazy. Take a trade, but keep your wrist tight. All right, guys, have a phenomenal afternoon. Join us, tradeproacademy.com/TradePro Daily for the morning market summaries and Periscope at 8:45 in the mornings. I'm trying it out this week. We'll see how it goes. All the best to you. Top of the afternoon. Good luck. And as our good friend Barbara says, stay green. Stay green, traders. Take care. Goodbye.